Hey, Kevin, they're not going to raise rates to where you want. Will the market take over?
Well, what'll then happen, Joe, is that we'll have inflation in the 6-7% range for a few years, right?
That's bad.
That's not necessarily really bad. It's not necessarily really bad for markets because remember, prices move faster than wages.
It's bad for everyone that's
profits won't look
bad for everyone and that we supposedly care about and that Democrats care about.
Yeah, that's true.
And they say Republicans don't, but I think everybody cares about those people.
Yeah, you're right. You're right. So it's a sad 3 or 4 years, like the 70s. Yeah, it's definitely bad, which is why, Chairman Hassett would be moving right now and moving much steeper.
Yeah. Where do you think? How far do you think they have the? I mean, is it feet of clay? How far do you think Jay Powell's willing to go?
I think that one of the things that we've seen over the last few years is that every time the Fed hiccups, then the market goes crazy. And the move the Fed has to make right now is pretty big. And so I don't think it's imprudent to have the first couple of moves be kind of small and cautious, just to make sure that there isn't some kind of weird, new normal where the market really overreacts to every little Fed move. But then after you get a couple of quarter point moves without causing a panic, then they have to start moving at 50 basis points. And so I guess that would be my outlook, would be that we'd have a couple of quarter point moves, and then we'd be looking at 50 basis points for the rest of the year.
Hey, Kevin, why should they care if the market overreacts or doesn't want them to do this? I mean, if it's what needs to be done, maybe the market's what needs to be brought along, not the Fed kowtowing to the market.
Yeah, it's a totally fair point. I think that Greenspan was the first Fed chair that started pointing to the market. But the problem is that if the market panics and all of a sudden you're looking at 10, 20% declines, then that can have an economic effect itself, and you can sort of miss the soft landing. And so I think that what the Fed people are hoping is that they can get interest rates up a little bit at a time without causing a market panic and get us to like a more sustainable trajectory without causing a recession. And frankly, if they do that, I'll be shocked. I think they won't be able to do that. I think that they're going to go too slow at the beginning. Inflation is going to continue to accelerate. It's running almost 10% right now. And then they're going to have to hit the economy with a hammer, and then the market will respond and we'll have a recession. So that's the most likely scenario.
All right.